Okay. Brilliant. Welcome to this meeting of the Audit Committee of Rotherham District Council. My name is John Barnes and I'm in the chair. Immediately to my right, the left, as you look at the screen, is Buddha, our new monitoring officer, who is going to be the senior officer present at this meeting. I will introduce other officers as and when they are called upon. Can I begin by taking the minutes of the meeting? Are they a true and accurate record? Yep, moved by Terry Byrne, seconded by Beverly Cooper, and I will duly sign them. Apologies for absence. I don't think I know of any.
Just an apology received from Councillor Mear, Chair of Council.
Councillor Mear, who is ex officio of this committee, has apologised for absence. Incidentally, I probably should note that Gary Angel, who is the head of internal audit, is online for this meeting and not present at the meeting. Additional agenda items, I have been given no notice of those. Disclosure of interests and dispensations. Councillor Thomas?
Chair, as Chair of the Rotherham District Housing Company, it's a non-pecuniary interest and applies to items 5, 7 and 8.
Councillor Byrne?
This may not be applicable, but member of Bexhill Town Council. It may come up in various agenda items.
Councillor Cooper?
Thank you, Chair. I'm a board member on the Rotherham District Housing Company. Thank you.
Right. Now we turn next to the draft statement of accounts, which followed, and I'm not sure who is going to present that to us.
It's Ola.
Thank you very much indeed. Ola, would you take us into this item?
My name is Ola Janowicz. I'm the principal accountant at the council, and I'm going to present a report for the draft statement of accounts for 24-25. So this report discusses the main issues affecting the statement and provides commentary on the main financial statements included within. This is a draft, unaudited statement of accounts, and Grant Thornton, our external auditors, have yet to start their work on the audit. They have probably been provided with most of the working papers that are available at the moment, and they are preparing for the start of the audit in the middle of September 2025. The Code of Practice has required no major changes in the presentation of the accounts, but what I wanted to note is that draft accounts do not include the implementation of the IFRS 16 relating to leases. This is because we don't have all of the information that we require for this, and we need to make an assessment whether any changes will need to be introduced or not. The statement of accounts consists of 5 main statements and a number of notes to them. The first note is the comprehensive income and expenditure statement, and it is intended to reflect the private sector accounting practice in presenting the profit and loss account. It shows the council's actual financial position, financial performance for the year, and it is measured in terms of resources consumed and generated over the 12 months to the 31st of March 2025. The statement shows the costs incurred in individual service areas, which are, however, significantly different to the ones that members may be accustomed to when they see the budget monitoring reports. That is because the CIES includes some elements which are not monitored during the year. There will be things like depreciation, impairments, amortization, and movements in the value of investment properties. The statement shows the council had a deficit of £6.5 million on the provision of services, and this was quite a large change compared to last year, and that is because there was a £4 million net increase in the cost of services. There was a £21 million accounting loss on the disposal of an asset relating to the transfer of Blackfriars land and infrastructure within it. The sale was to the Rother Housing Company Limited. And these were counterweight by the £8.7 million increase in the receipt and recognition of capital grants and contributions. So they will be mainly government grants and SIL receipts. Additional accounting entries relating to evaluation of assets and pensions, which do not affect the general fund balance, reduced the 24-25 deficit to £3.5 million. The second statement, which is the movement in reserve statement, shows the movement in the year on the different reserves held by the authority. And it is analysed between usable reserves, those that can be applied to fund expenditure or reduce local taxation, and unusable reserves, such as revaluation reserve for land and property. The movement in reserve statement links to the CIS and the balance sheet. So the deficit of £6.5 million from CIS is adjusted here for statutory items which should or should not be charged to the general fund. This is where the deduction of different things included in the CIS happens, and this is where minimum revenue provision is charged instead. So things like depreciation, impairments, any losses on sales of assets, these are all reversed in MERS in order not to have an impact on taxpayers. After these adjustments, we had a surplus of £1.2 million, which was moved into the earmarked reserves. It sounds like a large amount of money, but most of it was basically grants which we received and which will be spent in the next year. The third statement is the balance sheet, and this is something that shows us the financial position of the Council as of the 31st of March 2025. It shows the balances and reserves which are at the Council's disposal. It shows us the summarised information on the value of fixed assets held, the net current assets employed in our operations, and current liabilities, as well as long-term indebtedness. The net worth of the Council decreased by £3.5 million since 23-24. The main reasons for this change are increases in usable reserves. So, for example, £500,000 increase in capital receipts reserve, which was directly linked to the sale of an asset. Then it was an increase of £1.2 million in earmarked reserves, and also we received quite a large amount of money, £2.5 million in capital grants unapplied reserve. This is mainly SIL. There was also £7.7 million drop in the value of unusable reserves, mainly as a result of capital-related items within capital adjustment account. Then there's another statement that there is, which is also quite important, is the cash flow statement, which brings together all in a single statement all the inflows and outflows of cash into and out of the authority. These will be only transactions which are attributable to Rother only. Any amounts that are collected on behalf of other local authorities, East Sussex, for example, fire, they are excluded from that statement. Cash balances have been consistently decreasing over the last few years because the Council has been engaging in internal borrowing. This means that for capital expenditure, rather than borrowing money at quite high interest rates, we have been using up our cash balances. So as a result of that, even though we have had quite a large inflows of money from grants, we have had, at the end of the year, we have had to borrow for cash flow purposes in order to be able to pay for outgoing items. Another statement which is at the back of this report is the collection fund. So this is the collection fund income and expenditure account, and it reflects our statutory requirement for the Council to maintain a separate account in relation to business rates and council tax and the distribution. Overall, the collection fund balance at year-end was a deficit of 1.6 million, and this balance was made up of the council tax deficit of just over £200,000 and 1.4 million at deficit for business rates. The council is only liable for a percentage of those. So, for example, the majority of the deficit for council tax will be shared with East Sussex County Council, and in terms of business rates, our share is 40%. Overall, the balance sheet shows that the position of the council is still sound because we are able to meet our short-term needs. However, the majority of reserves being ring-fenced grants, it means that basically we have to make sure that our savings program is efficient and it is effective, because we cannot really afford drawing any more on the reserves. Whatever increase there is, it is really within the grants reserve. So these are grants which have a specific purpose, and they are supposed to be spent on those items. So in terms of reserves, we are not really able to support the revenue budgets any longer. So whatever we are unable to actually plug as a gap in the budget, we will not soon be able to actually get from reserves anymore. Thank you.
Questions? Before I open this for questions. Andrew? Yeah. Andrew, do you want to comment before I open this for questions?
Oh, right, sorry, I didn't hear it first time. No, just to say, overviewing scrutiny have had an outturn report that will be going to Cabinet next week, which puts things in much simpler terms in terms of the outturn. And the news is better at Cabinet than it was at ONS. So we will actually we did have an underspend this year, so we will actually be putting about 400,000 back into reserves at the end of the year. And we've had some good news on funding in year as well in terms of the producer recycling money. So we're going to get some more money there. So the position has improved from the sort of in-year reports that we've brought to the budget monitoring, quite significant improvements. We were predicting overspends and having to use more reserves, but in fact we will be putting some money back into reserves. And I am more hopeful now that we might be able to survive our remaining 2 and a bit years without having to go into extraordinary funding or anything like that.
That's good news.
Subject to the settlement.
Yeah, there's always uncertainty. And you make a good point that the draft statement of accounts is very different from the final year monitoring that we do. And indeed, local government accounting bears very little relationship to private sector accounting. So in a sense, the realistic position is our reserves have been boosted, which is good news, and which we congratulate you for. Much of that, of course, depends, and we'll come to it later on our Treasury management, and the position there may be slightly worse next year than it is at the moment. So savings, as Ola reminds us, continue to be absolutely important, and we are monitoring the savings programme quite regularly at this committee. Are there any points that members wish to raise or questions they wish to ask?
Yes, I'm really pleased to hear.
Councillor Thomas.
Really pleased to hear, and I'm sure we all are, the improvement in our financial position. Being able to put something into our reserves must be a singular achievement. I shouldn't think there are many local authorities that can actually proclaim that. So that's excellent news. Do you believe, are these changes which enabled the position to be so much better than was earlier forecast. Are they specific to this year, or do they reflect sort of ongoing changes, which means that the financial situation will remain equally sound in the years to come, please?
I'll take that. There's different challenges this year. We obviously haven't brought a budget monitoring report yet, but one of the issues last year that was affecting us was car park income. But the good weather this year has meant that car park income is very much increased this year, especially at Canberra. It's sort of 50% up on last year, which proves the point about it being weather related. There's a big issue on planning fees this year, which was an issue last year as well. That is carrying on. I think the costs of interims in the revenue account that was an issue last year will be less of an issue this year. We have fewer interims in senior positions as business as usual. We've got interims in the capital programme more than in revenue at the minute. So we don't have HR interims and things like that. There's so many finance ones this year, or now monitoring officer. Homelessness is an ongoing one that affects every year and will affect next year's budget, and we'll need growth in next year's budget as well. So some things affect us every year, some things vary year by year. So it's a sort of yes and no answer, really. Sorry.
Thank you, Chair.
Councillor Byrne.
With a purely audit hat on, what I would like to do is congratulate officers on providing a good visibility for our committee on local government finance, which, as you so rightly said, is an art. It's an art rather than a science. But as I say, we're not really here to pick apart the elements of the budget, but whether, as an audit committee, we feel we're being given the right information, and we're happy with the way in which our finances are audited. And as I say, I think the officers have done a very good job, certainly in providing the introduction, which makes it easier to understand. So thank you.
Thank you for that, Councillor Byrne. I don't think that requires an answer, Ola. There is a narrative in front of the accounts, which we also have to approve. There is one, it's not so much a wrong statement, but a slightly misleading one, where it says that the planning committee is 14 members. In the course of the year, we took a decision to reduce that to 10, although the decision didn't take effect until after the close of the financial year. So the statement is factually correct, but gives a slightly wrong impression. And I think probably with that small correction, we can include our approval of that narrative statement. Councillor Thomas.
I also ask one other question. It does relate to the housing company, but it's simply an inquiry, so I understand something in the narrative. You talk about, in that narrative, £21 million worth of assets being transferred, if I'm getting this right, so please correct me if I haven't, away from the council towards the housing company. Does that mean that the Spine Road, etc., is now formally in the ownership of the housing company? It does mean that. So we have now got an asset then. Thank you.
Yes, it means that the land has been transferred to the Rothesay Housing Company, and it included the infrastructure. That is why there's this, because the site has been really challenging, and it was mainly funded by the Homes England grant. It was a challenging site, so it cost a lot of money to actually put infrastructure in it to enable the housing, and the land was transferred back in March 2025, and it included that infrastructure.
Thank you, Jack. I knew about the land. I knew the land had been transferred, and we had made some payment in effect for the land, but I just simply didn't know that the actual road, etc., had also been transferred. So that's just news, that's all. So thank you for confirming.
If there are no other comments or questions, yes, we have a question online. Sorry, it's McGurk, Councillor McGurk.
Thank you, Chair. Yeah, just to join in the positive comments about the new expected outturn, that's great news. I'm just wondering, Andrew, if what Rother are doing, if anything, at the moment to make the most of the new fairer funding formula, and especially I'm thinking about the possibility for gaining, for raising additional funds for areas that are particularly under pressure from tourism. And I'm thinking again of Camber Sands, really Camber area, who, you know, we're all very familiar, I think, with the pressures of tourism. And you were mentioning the additional revenue from Camber car parks. Will there be anything that we can do, and are we doing anything now to engage with central government to make the most of that new formula, and in particular, as I say, the part of it that helps to alleviate, or is aimed at alleviating, those pressures from increased tourism?
The stage we're at the minute is responding to the consultation, so it's currently out to consultation. And we don't have any specific details for Rother, and we won't have till much later in the year, but what we are doing at the minute is reviewing the proposals, and we will respond to the government in due course.
Can I just ask, is there a timetable for that? Because I think it's particularly aimed at sort of transport and emergency services, that are so, and that's exactly the situation we're in, isn't it, at Camber, especially with emergency services managing those pressures.
Fair funding will come in next April, so it's going to be reflected in a 3-year financial settlement starting next April. What will be critical to us is, I mean, it's basically made up. There's going to be 7 areas for councils generally of need, and then that will be offset against our ability to raise council tax, which might be a notional figure, which could well be higher than our current council tax figure because we have quite a low council tax figure. And then there would be transitional arrangements if that means we lose funding, which is likely. But the details of that, and particularly the transitional arrangements, are not decided. Some councils are getting consultancy advice at the minute, private consultancy advice on what it might mean. But I've been through the guidance on that again today, and there's a lot of ifs and buts in what that offer is in terms of some of the advice would be illustrative rather than definite. So I don't think the government has decided yet on how it's going to work out the process for floors and ceilings and things like that in terms of transitional relief, what income it's going to count and what income it isn't going to count in that calculation. So there is a lot of uncertainty at the minute about what impact it may have on us.
Cheers.
Thank you, Andrew. Can I just remind you that included with your statement of accounts is a draft annual governance statement. We either have to approve this tonight or we can bring it to the September meeting. I don't know whether everybody feels in a position to approve it tonight.
Having read it, yeah, nothing jumped out at me as being either ambiguous or contentious.
Okay. You've read it? Yeah. So you're in a position really to approve that along with the statement of accounts?
I don't see why not.
Okay.
Obviously, it's a majority decision, isn't it?
Seconder for approval of the statement of accounts and the annual governance statement. Yes, Councillor Byrne, Councillor Thomas. All those in favour, please show. So we move to the revised anti-fraud and corruption framework. Gary Angel, our head of internal audit, is online. I'll ask him to present this and note that the changes are largely cosmetic. Gary, please.
Thank you, Chair. Good evening. Yeah, this is the updated version of the framework last approved by full council in December 2022. The version reported today is largely unaltered, as Councillor Barnes has just indicated. The most significant changes are names and job titles, and a couple of minor amendments to the wording to improve the clarity. So it's as simple as that, really. It's really just refamiliarising members with the contents. Hopefully members have had a chance to read through the document. Before I open up to questions, I just want to go for a few issues, well, a few questions that were raised at the briefing, which may be of interest. The first item relates to the fraud response plan. If you go to page 15, paragraph 2, it states there that the objectives of the fraud response plan are to ensure that timely and effective action is taken to minimise the effect of fraud and corruption by taking appropriate and timely action at the earliest opportunity. We discussed this and we discussed it's probably better to use the word minimise, change the word minimise to diminish, to ensure the motivation behind this action is not open to misinterpretation. So hope members are okay with that. The second point was a question regarding the anti-money laundering policy, anti-money laundering. I was asked if reference should be made to the council's responsibilities in respect to potential money laundering in leased properties. On that, my initial thoughts on the matter were that no amendments are required because the council would face no liability for any such wrongdoing, providing it undertook proper due diligence checks on the businesses before granting them a lease. However, I had sought legal advice on this just to make sure I'm correct, and I'll just read out what I was been told. Although any matters of this nature would be very fact specific, as a starting point, the council would likely need to be aware of illegal activity or money laundering for liability to attach. If the council were to become aware of such illegal activity or money laundering, this would need to be reported immediately to the police or appropriate authority, and no further rent should be accepted to mitigate the risk at this point. I should interject at this point, actually, that I think that the money laundering reporting officer should be informed rather than stopping the rent, because that could be classed as tipping off, which is in itself an offence. So that would be the proper procedure as per the policy. The legal verse goes on to say, should any illegal activity occur, the council would need to demonstrate that the checks have been carried out with proper due diligence at the outset, which is in line with what I said. It may also be prudent to review the anti-money laundering procedures and protocols to ensure that any potential risks are mitigated. So it's broadly in line with what I said. Having reread the policy, I don't believe that any amendment to the wording is necessary because A, the estates team do carry out due diligence checks before granting leases, and B, the need to report any suspicions of money laundering to the money laundering reporting officer are already clearly stated in the policy. So I think we're okay on that point. And the last item was asked about was what on the framework affects members, and the simple answer to that is all the procurements could affect members. But what I'm going to do very soon is once this has gone through council, to help navigate documents, I will be issuing some summary guidance, which are similar to what I've done in the past, which will go to all staff and members either via Teams or email, whichever way I can do it best. This will provide a brief explanation of what each of the documents are about, what you need, the key points you need to know, and a link to the full document for further information. So now I've clarified these points, I can open it up. Does anyone have any questions?
I think we'll agree the substitution of the word mitigate for minimise in 2 on page 15. Are there any questions or comments about the remainder of the paper? In which case, can we actually recommend to council that the anti-fraud and corruption framework be approved and adopted? I'll move that from the chair so it doesn't need a seconder. Those in favour, please show. That again is unanimous. Thank you very much indeed for your hard work, Gary, and
Thank
for
you.
presenting it so clearly.
Yeah, good evening. Yeah.
We now move on to the risk update on page 45, and I will ask Anna Evett to actually introduce this.
Thank you, Chair. So this is my risk report and the updated corporate risk register. In the covering report, you'll see that I've highlighted a few risks that have either been amended or they're very high risk, or where the risk appetite has been exceeded. So I'll just go through those now. Risk 1, political. Local government reorganisation and devolution will impact delivery of council services. This score exceeds the risk appetite and still reflects the uncertainty of local government reorganisation. Risk 2, financial. Now, this risk was previously marked as a social risk, but with feedback from the committee, I've changed this to financial, which I think sits much better. And it's the high costs of rental accommodation, house prices and living expenses are increasing demands for temporary accommodation. Again, it exceeds the risk appetite due to increased levels of homelessness. And there are lots of mitigations in place, but there still is a general slowdown in house building and the continuing lack of availability of affordable housing. Risk 3 is no surprise to anybody, economic and financial, which is failure to operate within a sustainable budget. Even though we've heard that the financial picture is a little bit better, the risk still remains high, and we've still got the uncertainty of the funding settlement. And as you know, there's lots of work going on to make savings and to mitigate this on an ongoing basis, but it still is a risk. We've got an emerging risk, and I've put this risk on here as an emerging risk, and we need to do some more work on it, but it's a financial risk concerning the Blackfriars development. So we're going to do some more work, and this isn't to set any hairs running, because the Blackfriars development is a very well managed and robustly monitored programme of work, but the project is getting to the sharp end of development. So building is due to commence, and there's a very tight build schedule for this programme of work. So I've raised it now as an emerging risk, but it's to be further, the mitigations are to be further looked at. What I don't want to do is not put it on here until it's perfectly worded, because then we'll have missed a few months before the next committee, and it won't have been brought to your attention. So they are the highlights of the risk report, and I'm very happy to take questions and any feedback.
Yes, I think first, Anna, can I congratulate you on the revisions to the risk table. This is now properly a dynamic document, and I think your hard work is appreciated on that. I have a couple of questions really from the chair. The first is on the second risk, which is now expressed as a financial risk, and I presume the social risks are largely treated as departmental rather than council. It's therefore probably right, in the light of this year's experience, to note that it will definitely, almost certainly lead to a deficit. We can never get the budget quite right. But on the other hand, because it comes up as red, it rather underestimates the achievements of the council in mitigating that risk. And it may be worth somehow reflecting, either in the minutes or in the table, that we are spending on meeting that risk quite considerable capital sums, which enable us to reduce the effect on the budget to single figures in percentage terms, whereas both Hastings and Eastbourne, roughly a third of their budget is now going on homelessness. Ours is well under 10%. I think the last figure I saw was 7%, which means that we can weather that particular financial storm. And we are about to invest further capital sums. So I think in some ways although we're rightly stating the financial risks to the council, the risk itself is much reduced from what we would otherwise face. And I think that needs to be reflected in our minutes and perhaps in a footnote to the table. The other one, which is much more difficult to gauge, is on risk one, because in some ways, much of what we're doing here is totally out with our control. And it's very, I really found it very difficult to quantify this risk. Everything could go with remarkable smoothness, and we would nevertheless find at the end of the day we're going to be included in a unitary authority with very considerable financial pressures. They will not be down to this particular authority. A simple question: are we doing a disservice to what is a soundly managed financial authority by representing the risk here as certain to materialise?
Possibly. It's not unusual for a risk manager to be slightly pessimistic about things. And I think you are right. There are so many mitigations and a lot has been achieved. But being slightly pessimistic, you only have to have a few changes, don't you, in prices going up and I mean, we've already seen interest reducing. So we're not getting as much interest on any money that we have, you know, call it savings or whatever. But I do accept your point. We might be a bit, I may be presenting it a bit negatively.
Councillor Byrne.
Thank you, Chair. I think there's always the problem that someone in Whitehall looks down and says, oh, Rother doing are okay. They don't need assistance. There's sometimes when you shoot yourself in the foot by being as good as you are, and therefore looking at the risks maybe in a slightly pessimistic way, certainly not over-egging the pudding in terms of saying, but we're coping. It's a tactical judgment rather than an operational judgment, but I'm sure our CEO and the senior management team are aware of it, but we certainly don't want to paint the picture that says we don't need assistance. And we've seen some awfully badly managed councils bailed out when we have actually been struggling and taking a lot of pain not to get in the same position. So I sometimes feel a bit aggrieved by that. So I'm quite happy if the position obviously is not overstated, but certainly isn't understated in any way in terms of risk.
Yes, and to be fair, I'm well conscious that in monitoring the savings programme so far this year, although compared with past years it is a great success, I look at the 17% which we haven't delivered yet, and the 7 or 8% that we're unlikely to deliver. And so the financial pressures are actually growing because savings are increasingly hard to realise. So I do take your point. Does anybody else have a comment or a question? I think, Councillor Thomas, you had one.
Yes, just one other point I'd like to make, simply that in relation to Blackfriars, the project is currently running ahead of schedule. It's a very dangerous thing to say, of course, because that's just a, touch wood when you say that, obviously. But what I was going to comment on was what you had to say about people, because we are in a difficult position, because we do pay less than neighbouring authorities. And consequently, we are in somewhat of a pattern of losing key staff. And because we're also trying to make sure that our staff costs are as low as possible, certain key people are unlikely to be replaced. The Rother District Council Whispering Gallery is saying that Deborah Keneally is unlikely to be replaced. And obviously she's a very key officer with huge responsibilities. And so if she wasn't replaced, that would put a considerable burden on other officers. So I'm just wondering whether that rating that is yellow isn't being a little bit on the optimistic side to make a change. What would you say about that one?
I think there's a whole package of measures that we're looking at, which we would call, the employee value proposition to retain staff. So we're looking at how we develop people, we're looking at the benefits that we offer, and we've improved the benefits offer quite considerably recently. So we're looking at ways in which we can develop and retain people. There is one particular neighbouring authority that pays more than us, but I think they are more of an outlier, and we're more on a par with some of our other neighbours. And of course, with any staff changes, we just have to try and do more for less, really. Look at ways that we can streamline our processes, potentially work with the voluntary and community sector with certain things. We're doing more partnership working. But again, I may have been a little pessimistic about this one, but I think we need to just keep an eye on the turnover rates and see how that's going.
On that. Yes, that's brilliant. All that stuff is being done to try to retain staff. That's excellent. But there's also a limit to what can be achieved in that way. And it's not just a question of the neighbouring authority, mentioning no names, namely Wilden, but also there's Brighton and Hove, which is also a considerable magnet. And I think one of the things that's going to aggravate the situation is that whereas we are destined to disappear, Brighton and Hove has a good chance of retaining unitary status, as obviously some other places will. So that's another thing. So I'm not so certain that isn't, and also we've lost some key staff and had difficulty in recruiting in some key areas like project management and so on, which are very key to the council being able to operate efficiently. So I think it is a very real risk, despite all the wonderful things being done to mitigate it. Yeah, thanks.
Can we ask you to look at that? I ought just to remind the public that you declared an interest as chairman of the housing company. There are one or two other minor changes which came up at our briefing meeting, which I will take now if there are no further questions or comments. Yeah, there is one online from Councillor McGurk. Councillor McGurk.
Thanks, Chair. I might be being oversensitive here, someone who's worked as a council officer for 30 odd years, but I just feel a bit uncomfortable about this is obviously really sensitive issues. We're talking about people's actual livelihoods and jobs, and talking about officers by name. I think we just need to think twice before doing that in this kind of setting. There are sensitivities about this process and about the personnel and HR, issues and the personal impact of this that we just need to be cognizant of.
Thank you for that. Under risk 10, I think it would be sensible to add to the mitigating factors the building of more affordable housing, which we are certainly accomplishing through the housing company, and we're trying also to encourage community land trusts and a variety of steps really in the housing strategy, which we hope will begin to alter the current position, which is one of a very considerable shortfall, which does render us open to real problems in the planning side. Another question which came up, and I don't think we ever decided on an answer, is, given that Hermes has failed this year, costing us a certain amount of money in capital terms, overall it's been a good investment in financial terms, but in strict capital terms, we've forfeited about 400,000. We wonder whether the CCLA property fund should be added in some measure to the risk register. The major mitigating factor there is that, of course, we are unlikely to be forced to sell at other than the time of our choosing. What has gone wrong with Hermes is effectively the fund has been liquidated and we've been caught in the backwash. I don't know, Anna, whether you have a view on that.
No, I don't have a view on it other than it's a certainty, isn't it, more than a... But I would be interested in my finance colleagues,
Could we leave you to explore that and take no decision today? But we will definitely add the affordable housing mitigation. I think really that is the sum total of what we need to do. I have asked that members, given that a number of us are new, are briefed on the escalation process, which takes a departmental risk onto the corporate register. Because below this, there are departmental risk registers which we don't look at. So understanding why something would appear here, I think will be useful for members to understand. With those observations, can I ask you to approve the risk register? Again, I will move approval from the chair, so I don't need a seconder. Well, I've got a seconder, Councillor Biggs. Those in favour, please show. That too is unanimous. Which brings us on to item 8. My screen is not moving at the moment. It's the Treasury Management update. And Andrew Valence has vanished from our screen. He was going to... he's there. Sorry, Andrew. Can I ask you to introduce the Treasury Management update?
On the whole, it's a positive report in that we haven't had to undertake any borrowing for capital this year. As mentioned earlier, we've been using internal funds to fund capital. So we haven't been at the risk of the markets. Obviously, with PWB going up, it would have been very expensive to borrow. So I'm glad to say we haven't had to borrow from PWB this year. We've only had to do short-term borrowing at various times. We have made more money than budgeted from interest because we had the levelling up money available to us during the year, and we were able to invest that on and make money from that. Unfortunately, I think next year we won't have that money and we will have to start borrowing more. So next year probably won't be so good, but this year has been very good in terms of the income side and avoiding long-term debt. So that is very positive news for the Council's finances there. Obviously, as almost referred to already, the big issue in this report is having to take the hit in the current financial year on Hermes because of it being liquidated, and we are expecting that in the next month or so for that to be realised, and we will have to take that as a loss to the revenue account of around 400,000. We don't know the exact figure yet. Just in terms of CCLA, there is a risk there, but it is mitigated quite heavily by the statutory override, which means we don't have to. We are currently running at a capital loss on CCLA as well, but we don't have to take that to the revenue account probably for the rest of our existence now, because the statutory override is now been extended to 2029. So we will not be taking any loss if we were to incur a loss to our accounts in the next 2 years. But actually, just for information, CCLA has actually been bought this week by Jupiter asset management fund or something. So it's actually CCLA have just sold up, or in the process of selling up, which is, yeah, I thought you'd be quite surprised by that. So it's going to have a change of ownership in the next few weeks. But we assured there'd be no extra charges, but it's going to have a private management company own it. So that's quite a change. But apart from that, as I said, it's good news, and Hermes is the main sort of news item really on Treasury for the year, as stated in the report. Let's take any questions.
Yep. Questions and comments? Yes, please, Councillor Delaney.
Yeah, Andrew, I just wondered what the impact of having the Hermes money coming back. I know we're going to take a hit on the capital value, but having that money back in our budget, in what way will that impact on our?
In the simplest of terms, it would just mean we wouldn't have to borrow that amount. We could reinvest it, but most likely is it will just reduce our borrowing for the year, because we are now going to switch into borrowing, and obviously PWB at the minute is up around 6%. So the more we can avoid borrowing at the minute, the better, and we wouldn't get 6% return. So the most likely beneficial way we will use the money is just to cut down on external borrowing. Not 100% on that, but that's the most likely what we'll do in the short term.
Thank you. Sorry, was that hand up? No.
Oh. Whereabouts would that go, Andrew, the money from the Hermes? What fund would that go into? Like what, general reserves, external reserves?
It's just cash. It's just cash. So it'll just be cash that we don't borrow. We will just reduce our borrowing, avoid borrowing more likely.
Yes, the £50 million left in the capital account is all borrowing at the moment, isn't it?
Yeah.
Councillor Thomas.
Thank you, Chair. I'm curious about something. Is it your objective in terms of financing just to keep the amount of money to be borrowed as low as possible? So the less money borrowed from a finance point of view, the better that is. Or is there some kind of rule of thumb that might be used by finance officers of all district councils along the lines of, if this is the amount of money the council spends in a year, this is a reasonable amount for that council to borrow? So in other words, is there some accepted ratio between the expenditure of the council and what are its practicable or desirable financial limits on borrowing? I'm just curious.
There isn't a generally accepted ratio, which means some councils have gone up to sort of hundreds of times their revenue accounts, such as Woking. So there's no actual standard to which they're compared at the time until things go wrong. The amount of borrowing you should do should depend on the business cases for what you are borrowing. And those business cases will be influenced by what the interest rates are at the time. So at a time of low interest, you would be able to borrow more, do more projects, because more business cases would add up. At a time of high borrowing at the minute, most business cases will fail because they don't generate enough revenue to pay off the really high interest. There are obviously people now judging which councils have borrowed too much. But up to date, there hasn't been any rules or any generally accepted figure for what is too much. Obviously, we've all looked at some of the councils and thought that they're way over the top. And I have to be honest, when I came here, when I saw the original capital programme, I thought that was too much for a small district council, which is one of the reasons why Duncan and others have worked on reducing the capital programme over the last year or so. But again, that was partly because the business case is no longer stacked up because interest rates have gone up so much. And if, as long as you borrow at a fixed rate, it doesn't matter what happens to interest rates for the next 20 years if you borrow that money at a low fixed rate. But unfortunately, by the time some of these projects get off the ground, then the rates have gone up and the business cases don't stack up anymore. So no, there isn't a fixed formula or anything. It's a judgment, but it does need is people got complacent because rates stayed low for sort of 20 years. And now in a volatile market, and it's likely to stay a volatile market, it does reinforce the need to keep revisiting business cases year after year. And not even a business case that's a year old might be way out of date now because of the volatility.
I can throw that up. Thank you, Andrew, for that. And I appreciate what you're saying and the importance of it on making sure that each individual project, there is a decent business case for it, etc. I'm curious about, you had this amazing success in cutting the capital programme by no less than £76 million. That's a massive change, obviously, in the direction of financial prudence, and that's fantastic. But I'm curious about how do we now stand? If originally our projected capital expenditure was over the top for a council of our size, how do we stand relative to other councils in relation to the average council of our size? Are we achieving what the average council is achieving? Are we spending as much or more or less than the average council? How are we faring in comparison with other councils, please?
I think we currently have relatively low debt. I can't remember the exact figure, but I think we've got under 30 million borrowing at the minute from PWLB. That is quite low compared to other councils.
How much lower?
I don't have comparative figures here. There's all sorts. You've got councils borrowing 2 billion.
That is best explored outside the...
Yeah.
It's a very interesting question, isn't it?
No, benchmarking is an art rather than a science, I think. It's useful to benchmark, and I'm sure Andrew will be able to answer your question, but I think he would require notice.
The reason why I explore that is because it may have implications to policy. That's why I explore it. Thank you.
Sorry, I was not saying, Councillor Thomas, it wasn't worth exploring. I just think that our finance people deserve notice before they're asked to answer what is a pretty complicated question. That I'm sure Andrew will satisfy you in the next few days.
Andrew has always been very helpful, seriously, in relation to any question. And I appreciate your transparency, actually, in relation to questions that I've asked you in the past and today. Thank you.
I think as an audit committee, we should be extremely grateful to what has taken place, which is the first serious review of our capital budget that I've actually seen since probably 2018, something like that. And it has saved us considerably on the revenue account, as well as put in place the right sort of review of business cases, because we were in some danger of using levelling up money to fund projects which hadn't got an up-to-date business case. So our finance team deserve every credit for gripping that problem and resolving it. And I really think that should be mentioned. Are there any other comments or questions? In which case, it seems to me that we note the report and note also the considerable improvement in the handling of the capital budget. Everybody agreed with that? Please show. Unanimous, well done. In which case we move on to the Audit Annual Committee report, which is really Councillor Drayson, the previous chair, was in the chair for the duration of this committee. Therefore, I think actually I will ask Andrew to introduce, but note that Councillor Drayson has seen the report and approved it. Andrew.
Thanks, Chair. It's just a very factual report listing out the work done by the committee over the last financial year, really. It's very simple, hopefully non-contentious. Just lays out how busy you've been, really, as a committee, and the valuable work that's been done.
Are there any questions on the annual report? Or can we approve it? I better have a mover other than myself, I think. Councillor Thomas, seconder, Councillor Biggs. Those in favour, please show. I think we're all agreed with that going forward to council. We turn finally to the work programme. A couple of things came up really. The Grant Thornton management responses to informing the audit risk assessment. It's currently down for September. We reported at the June meeting that would not take place then. I think we ought to remove it now from the work programme. And then, because we've looked at the risk review, it looks sensible to postpone the next risk review from the September meeting to the meeting following, with the proviso that if there is anything major that comes up, Anna will bring it to our September meeting. But with those changes, is there anything else anybody would want to say about the work programme? In which case, can we approve the work programme as amended? Those in favour?
I was going to make a comment with a proviso, because of the changing state of local government reorganisation, that that may well come up with additional risks, and if it were to do, or if there was even a massive policy change, then I think that should come to audit committee. So there's hopefully, and it does seem from the work programme here, we have the capacity to take on anything that might come out of the blue as a result of local government reorganisation.
Yes, I will ask our officers to alert Anna if there are things that they think are going to be major, which would necessitate us having a look. And I will ask them to keep me informed as well. But it's a sensible proviso, but clearly if there's no major changes, then leaving it slightly more than the month of August and a few weeks seems sensible. In which case, I think I'm happy to declare this meeting closed at, good Lord, 7:35.